Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Welcome. Today is October 2nd, 2014, and this is episode number 5 of Accredited Investor Markets Radio. We have a great interview for you today with Brian Thopsey of FundWisdom.com. But first, should you buy stock in private companies? That is the question. Well, that is the question that is also the title to an article by Jen Wiesner appearing in the September 1st issue of Fortune magazine. And by the way, Wiesner is spelled W-I-E-C-Z-N-E-R. The question is one that AccreditedInvestorMarkets.com first wrote about back in 2013. You can read more on the news tab at www.AIMkts.com by looking at an article published on August 27th. So what else is noteworthy? Did you know that at least 109 public libraries in the United States have, or are close to having, 3D printers available for their patrons? Wow. I'm afraid I have to admit there weren't any printers at all in the libraries when I was a kid. I don't think Andrew Carnegie contemplated such a thing, although Andrew Carnegie was no stranger to technology. Anyway, it's pretty noteworthy. Now, that tidbit comes from an article in the September issue of Wired magazine by Clive Thompson and Ben Weissman, The New Library, Making It Without Books. Now let's see, if these things get sophisticated enough, could there be a public library that had a 3D printer which printed a public library? Well, enough of just me. We have with us today Brian Thopsey, a founder of FundWisdom. Brian, good to have you with us. We are focused in this radio series on investments by accredited investors in the equity of startups as opposed to straight-up crowdfunding. And the accredited investors invest in equity of startups sometimes through an online platform like your company, FundWisdom. Why would an accredited investor prefer equity investing in startups to debt investing in startups?
It's a great question, Chris, and I just want to start off by saying that how excited we are to be on your program today, and excited about the opportunity to connect further to the accredited investor audience that you have here, and the opportunity to potentially learn more about how we can improve the services that we provide.
Yeah.
To question about equity versus debt investing through platforms, we offer both equity and convertible debt, but do not cover any straight debt currently. The preference of an accredited investor would depend upon the individual's appetite for risk and their desired portfolio makeup. So I guess kind of following portfolio theory, if you're a 60-40 stock bond, if you're more aggressive into the equities markets, then our solution, our platform would more than likely interest you. And so does the opportunity here excite someone in the space? Our assumption is yes, and that's why we decided to go into offering this solution to the market. So to the point of whether or not you're interested in equity or debt, it comes down to your determination of your risk profile and how risk averse you may be. The typical startup and kind of the seed Series A rounds that we cover on our platform are the typical higher risk investments. We often hear 8 or 9 out of 10 startups fail. And at the end of the day, that is something that we understand, but there's also the opportunity of incredible rewards and being part of something that has the potential to be incredibly great. So the potential for the next Facebook or any other potential blockbuster firm.
I guess, Brian, if I'm sitting here then, taking what you say, let's just say 8 out of 10 startups fail. I think it's worse than that, but maybe it's better than that. And if you have a platform that provides equity investing opportunities in those 10, and if you have a different platform that provides debt investing opportunities in those 10, well, with a significant failure rate like that, you might actually be better off with the potential grand slam you would hit with a successful startup than protecting your downside on the other 10 in a series of debt investments. I guess it might depend, of course, on how well secured you were. What do you think of that?
Yeah, I agree with your opinion there, which is another reason why we decided to pursue this market. However, I guess it comes down to the appetite of risk that the individual investor has. I believe there is a market right now for these types of equity investments. There's also a burgeoning debt market that's also in place right now, and that's continuing to see a tremendous amount of growth as well.
Yeah. All right, let's go back to your company, FundWisdom. By the way, how long have you been around?
I started a firm in 2007 helping small businesses build their web presence and took the kind of shell of that company and created FundWisdom 8 months ago.
Ah, okay, good. All right, so FundWisdom offers investments to accredited investors in the equity of startups, as we've been discussing. Of course, it's an online platform. Now, an online platform cannot contain all of the potential investments in equity startups that exist, so you have to choose as a platform what you present to the public, and you have to choose that based upon certain selection principles. All right, so the savvy investor is wondering what those selection principles might be in a given case. What kinds of selection principles are there, and how do you compare platform to platform?
So we're looking to cover the entire equity and convertible debt market. So every platform, every offering on a platform that has equity.
Let's just say startups, just equity offerings and startups. I mean, I don't suppose you can capture all of them on your FundWisdom, so you have to choose.
Yep. So I guess our limitation is on the agreements that we can come to with platforms. So we currently have 9 platforms we're working with, and we're looking to extend that. Now, kind of getting more to the point of where we are focused within that space is we are focused on a subset of companies that are only raising online, so leveraging the power of the internet. We want to be as easy as possible for the investor to find the necessary information and immediately put the money that they're looking to invest in.
When you say companies only raising online, does that mean they've never raised anything else, or does that mean they're only raising online at this point?
It does not preclude them from having raised previous rounds. We're starting to see companies raise additional rounds on equity-based crowdfunding platforms. So there's definitely no limitation there. It could be a seed round. It could be a Series A round. We're even starting to see some follow-on Series B and further rounds happening on these types of platforms. But the majority of them are startups that have little to no revenue and are really raising their first seed round outside of the friends and family.
Okay. Do you do any selection among them to decide which of these startups are eligible to be on your platform or are not?
We are currently only covering startups that have the first bit of money in them. So there has to be a bit of traction. So an investor has to have put money in for us to cover it right now.
All right. Well, let's change the discussion and let's talk about online dating. Well, I mean, as a metaphor. FundWisdom seeks to match up the preferences of accredited investors with the needs of startups, or vice versa, perhaps, which to me sounds a little bit like some of the online dating methods. I haven't done it in a while, but I mean, what do you think of that analogy?
I think it's a great analogy. We actually often hear that. And what we've seen in the market for online dating is incredible growth and some incredible technologies leveraging the power to connect individuals. And I think it's a great analogy because of what's happening within that market. We hope to follow suit, to hopefully leverage those same types of technologies to ideally connect investors to startups that really are of interest to them and that match their needs and their desires.
Okay. So looking back, and again, we're talking 10 years ago, I recall online dating sites asking you about your preferences. And these preferences were things like age, educational level, height, weight, religion, languages you speak. I mean, it's pretty simple analytics. Are these analytics being improved upon metaphorically in your space?
Yes, definitely. So there's a number of institutions that are kind of doing this deep dive data analysis that we're hoping to work with. From a standpoint of the individuals who are going to sign up and use our service, we're currently allowing you to select your industry, your location, and a few other factors to help us align the investment opportunities to your desires, to hopefully save you time and money trying to select those types of investments.
Well, yeah. Well, I mean, FundWisdom has a great opportunity there. There's a great forest of unknowns, and just getting the information out there about startups is a great opportunity for accredited investors who used to be limited, of course, to friends and family, basically. So startups often want angel investors. Perhaps you've referred to them by different names earlier in our conversation. So just speaking generally, not necessarily with regard to FundWisdom's activities, would an accredited investor want to see angel investment in a startup before the accredited investor invests?
I think it comes down to the preferences of the individual investor. I think it's good to see, but you shouldn't let that limit you. I guess if you kind of categorize angels as those who are kind of in the space and then focus on those that are intimately familiar with a particular market and kind of look to them to help you with your decision making, sure, that can be a good leading indicator. But at the end of the day, it really comes down to the due diligence of that individual investor to perform to determine if the investment is right or not.
Oh, someone could use a angel investor as a kind of proxy for the due diligence you're performing, if you happen to know enough about the angel investor.
Definitely, yeah, of course. So a number of platforms are currently allowing you to see those kind of lead angels or lead VCs on these types of investments so that you get that exposure, and we help to kind of let you see that so that if that is important to you, then yeah, of course, that can help guide your decision making. But again, I think it's a matter of diving in a little bit yourself to make sure at the end of the day that you're comfortable with the investment as well.
When an accredited investor goes on to FundWisdom, does that accredited investor have access to the startup's private placement memorandum? Do each of these startups have one?
So the private placement memorandum we don't currently have access to directly. When you are interested in the investment and you click on to invest in the opportunity, it immediately takes you to the page on the platform to be able to get the private placement memorandum or any other legal documentation that is required once you've proven that you are in fact an accredited investor. On our site right now, you don't need to have that. We allow anyone to see the opportunities. You don't necessarily need to be an accredited investor to view the investments.
Oh, so there's an opportunity to learn if you're on the cusp of becoming an accredited investor. For example, you're about to marry somebody with a really good job. So you're about to marry the brain surgeon of your dreams, which will make you an accredited investor. And now you can go on to FundWisdom and at least see the kinds of you cannot see the private placement memorandum necessarily, but you can see the range of startups that you might have a chance to invest in.
Yeah, exactly. The other piece to this as well is with the investors who are not accredited too, with the Title III of the Jobs Act coming down the line. Eventually, it's going to open up an additional avenue for non-accredited investors to also invest in kind of a separate round. I think the accredited investors are still going to continue to kind of reign within the space and continue to be the kind of go-to for startups, but it will kind of create an interesting dynamic for the startups who are looking to raise potentially smaller amounts of capital.
I've read about, having not been involved intimately in this space myself, I've become aware of a potential strategy that a startup might use, which is to attract crowdfunding excitement among non-accredited investors under the process you were perhaps describing a moment ago. And with that in hand, then go forth to the accredited investors. Are you seeing any of that?
It's hard to say for sure because there are several platforms that are putting wording on their sites to kind of attract and share that they are ready and waiting for the opportunities for non-accredited investors. I would say WeFunder is kind of has the most, from what I've seen, language really focusing on that opportunity, but all of the current platforms that we work with are very much honed in on making sure that the accredited investor is catered to right now.
Brian, now you've founded FundWisdom, and you know a lot about how these platforms are put together, can be put together. When you look at other platforms, they could be debt platforms or equity platforms. As an insider, what do you look at? Are there speed dimensions to getting at data, speed dimensions to getting at different opportunities, or completing transactions, or are there presentation issues or selection issues? What kinds of things do you look for?
Yeah, we want to see the opportunities shown, and we want to allow our audience to be able to invest as quickly as possible, and that kind of comes down to what I've seen within the market and trying to be able to assess the investments and then dig in and get as much information as possible to be able to run our own due diligence to kind of go through the investment decision-making process. From a standpoint of what's out there, though, I would say, yeah, speed to be able to make the investment decision is important and kind of go through the investment. But one of the most important factors for me when I work with both investors and startups is the costs that are associated. So there's a number of different kind of models that are out there for cost structures in each of these platforms right now. So we've got a range of different costs. So we've seen anywhere from a 5 to 8% take on the amount raised. Some don't take anything off the raise and charge potentially startups a monthly fee to access and list their offering. Some, like AngelList and a few others, just take carried interest. So they'll only take money if there's a liquidity event down the road. And so those that don't kind of have those kind of additional hidden fees, or maybe not so much hidden, but fees in general, the model of the carried interest, I think, is a rather intriguing and compelling one because they're really only benefiting if there's a liquidity event down the road.
Yeah. Meanwhile, I guess if you see a fee that's high that a platform is collecting, it's obviously going to dilute the impact of your investment.
Exactly, and I think that's one of the great things that's happening within this space is because of this, it's improved the costs for both entrepreneurs and investors because this kind of idea of just taking the carried interest with no management fees this way is really interesting, and I think it's really improving terms for entrepreneurs as well by kind of exposing a little bit more. It's also allowing more access to underserved markets that typically VCs and angel investors would stay away from. Now there's potential that smaller businesses are now getting investors that they otherwise wouldn't have. It's really creating some really interesting dynamics, and we're hoping to provide some transparency in the market to kind of really allow people to see what's happening.
Well, that's great. I mean, another example of markets providing the means by which participants in the markets can effectively police what could be a hidden set of fees, but maybe you're bringing it to light. In fact, you have an entire page on your FundWisdom website devoted to this issue, don't you?
Yeah, we created a site. The URL is rather long, but I'm sure you can post it. We do in fact have a page that exposes the current investor costs as well as the entrepreneur costs, and we go into the detail into each platform that we currently cover.
I thought that was a brilliant thing when I saw it, so I had to mention it on this broadcast.
Thank you.
Well, I guess that's about all the time we have today. Brian, is there anything else you'd like to tell us about your industry and your experience as a founder of an online investment platform?
Well, I can tell you it's been quite the ride building this company and really diving into this space. Got a chance to meet a lot of really wonderful people who have really helped out in a lot of incredible ways. And I feel like now is one of the best times to be an entrepreneur starting a business. At the end of the day, it's still going to be a struggle, and I've had my fair share of ups and downs and failures. Still, I'm continuing to hopefully grow this business. But because of the fact that there are so many things happening within kind of the social environment with shows like Shark Tank and cities and states and even countries investing in kind of startup communities and job creation and the Jobs Act. It's really a wonderful time, and I'm really excited to be part of this growing market and to be growing this business and to be connected with an amazing team of people who are all kind of working together to build FundWisdom. And I want to thank you so much for having us on this podcast. I encourage you, listeners, to potentially create an account, try us out. Feel free to reach out if anything comes up. We are just starting off here. You know, like I mentioned earlier on, it's only been 8 months that we've been doing this. So we have a limited set of users, so we definitely are able to kind of cater to the individuals who sign up early on with us, and we're genuinely excited to hear from you.
Awesome. Well, thank you very much, Brian Thopsey of FundWisdom. You have been listening to Accredited Investor Markets Radio, a weekly podcast devoted to educating investors about the basics of investing in alternative assets. On behalf of Accredited Investor Markets Radio, this is Christopher Cahill. Let's do this again next week.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.